I remember when we first started this channel, and the goal was to provide as much value as possible to traders all over the world. That's exactly what we did. I said to you from the beginning, the more you invest into the channel invests back into you. This is going to be your hub, the place where you know you're going to get the consistent message. You're not going to be led astray. You're going to have valuable information that's not just going to help you from a technical perspective, but also a psychological perspective, also from a life perspective, knowing that you can be the best competent trader that you can be. Now we are at 100K YouTube subscribers. Thank you so much for your support. This has not been an overnight success. This has been something we've been putting time and dedicated hours every single week for years and years and years. We've got huge plans for the channel, and I hope you've become a better individual as you watched our journey grow and the studio grow. We're in a brand new studio and we've really put the time in. We've got so many big plans for the YouTube channel. I'm confident that this is going to be the #1 place where you completely level up your trading career, but more so a channel that you can trust, knowing that the information that you get is going to be the key to your growth. Can you trade 100% mechanical, or does some element of discretion come in? Is an element of discretion good? Well, in this episode, I aim to break down a lot of myths, because we get a lot of regular questions over the past few years about, can I trade this way? Can I do it when it's 100% mechanical? Is 100% mechanical sustainable? Is it not? I'm going to cover all of it, because people in this industry cannot make up their mind. 1 minute they're 100% mechanical, the next minute a little bit of discretion is okay. 1 minute focus on big returns and be in and out of the market, now focus on small returns. This is corrupting traders' minds. No wonder people are confused. They don't know what to focus on, and there's no accountability, no responsibility to people of influence that are guiding these people and confusing them, so they don't know what to focus on. What I'm going to repeat to you guys is the same message I have been repeating for the past 7 years, and the message I'll repeat time and time again. Before, these returns, the same people that are now laughing at bigger returns were the people that created the problem in the first place. But there's no accountability for that whatsoever. So then what happens is we take on traders where they're completely damaged, they're corrupted, they don't know what to focus on, because they've seen making 5 or 6% a month is actually just really average, because I've seen traders make 20% before they've had their baked beans. And it's this type of mentality that has destroyed a lot of traders. So in this video, I'm going to break it all down, and I'm going to cover a lot of the myths that has been holding you back for such a long period of time. People have asked me for the last year straight, in almost 98% of my IG lives, can I blend this with this? Can I trade SMC with Falcon? I'm going to break all of that down, and you're going to see what's been holding you back and how you're actually capping yourself and keeping yourself in a lot of drawdown on your funded accounts without considering what I'm about to tell you. So before we move further into this episode, I just want to let you know that on the 28th of November, the prices of the membership are going up. So this is the first time in 5 years that Falcon is raising its prices. Along with that, we are introducing our brand new trading course, the all-in-one mechanical Falcon mechanics. You're going to absolutely love this, because this has been intentionally designed to take someone from a complete beginner all the way to an advanced level of trading with the ability to have access to our in-house fund. We have taken all of the best parts from our top traders that are scaling up and been extremely successful over the past 7 years. So essentially, no stone is left unturned. It's never been easier to understand exactly how and why we trade. Currently, the prerequisite to trade on our in-house fund, which is a very common question, is 3 months of being a Falcon member. After the 28th of November, that's going to be changing to 6 months. So if that's important to you and you want access to that bespoke in-house fund, then make sure you're in before the 28th of November for the fund, and also before the prices go up. So for any further information, make sure you check all the links in the description, and you'll have all the details. So let me show you on the chart. So I've got euro dollar up here, and I want to clarify just a couple of things. Discretionary rule-based strategy, which is really important. It's each trade situation assessed on its own merit. What we use is a systematic approach. So Falcon is a rule-based system. So we're using a mechanical process all the way through, but we're assessing the trade by trade, because you can't take the same trade in a different area and think it carries the same risk. So on the 28th of November, I'm just going to clear this up for you guys. On the 28th of November, we have something coming out called Falcon Mechanics. Now this is a new course which has made the Falcon system even more mechanical, so methodical. I'm gonna give you some insights here. So hopefully this helps you out. So a lot of people ask us, right, well, I trade this way, I trade at SMC, but I'm trading on the other side to retail, and then conveniently, you're in the same direction as us in the first place. So are you retail or are you not? It's very confusing. However, you are capping your trade short, 100%, I'll show you. So let's say we've got euro dollar here. This is what I mean about if you're setting TPs at 2-to-1s and 3-to-1s. I had a couple of traders come in recently that had this scenario. They're deep in drawdown on their funded account, and what's happening is because they've taken, let's say, 6-7 losses, like boom, boom, loss after loss after loss, what they do is they then start to limit their risk. So they go from 1% per trade to 0.5%. Good idea, I like it. However, you've now got to make 12% to get back out. That becomes really tedious if you're capping it at 2-to-1s, 3-to-1s. What I'm saying is there's nothing wrong with that, but there is when you're holding the trade short that you're capping the trade short that actually have the ability to go on for so much longer than you realize. So I'll show you what I mean. But imagine you're selling euro dollar in here. Do you think that you would have to manage euro dollar up here when you've got all of this move, which again, if you're saying it's easy to say it in hindsight, join a community, join the webinars, you can go see it for yourself. This is way ahead of time. This is months in advance, this is nothing new, right? So Falcon guys will know. However, you wouldn't manage euro dollar the same way up here as to how you'd manage it down there, because these are structural lows. So of course you're going to be more aggressive. And this is where set and take profit will probably come into play. I actually have in the Falcon Mechanics, which is coming out on the 28th of November. So make sure that you're in before the price goes up for the membership as well. And you'll have access to all of that and you'll have it all locked in. I've included a new management system. So it's a more mechanical based management system. It's absolutely phenomenal. The accuracy that will increase your returns. This will help you so much. If you're someone who's going on funded capital, game changer. So you're going to have that included in the Falcon Mechanics. However, if I zoom into, let's look at a trade. And if you like this content, by the way, let me know. And I'll actually pick a couple of these trades and I'll create a whole episode just on top to bottom, just 2 of these positions. So let's have a look at this run. We'll ignore that trade and we'll just focus on, well, actually, we'll focus on this trade here. So it would be the equivalent of this. This is what I mean. So imagine you're in a trade, and so many people take noisy trades, by the way. If you're taking sells in here, sells in here, sells in here, amateur, like this is where you're taking unnecessary losses. The value's here. It's so simple when you look at it the way that we do. So if you look at a trade here, say it's a 15 pip stop, it would be the equivalent of a trader showing me this, and this actually happened. It was like, look, I got out here at 3-to-1. And I was like, why? He's like, yeah, but I just had it set at 3-to-1. So, but that makes no sense because the probability of us tapping those lows was so high when you know what you're looking at. Why would you cap? Like someone showed me 1-to-1. Like, why would you cap a 1-to-1 there? That makes no sense whatsoever. I'm not adding more risk to my trade by keeping it open because I'm not going through loads of noise. I'm just targeting a structural low, this basic stuff, right? So if you look here, 7.5, simple. You're in the same trade. Why would you not just let it run? You're not letting your winners run. That's the problem. So you have to understand that when you're taking these positions, you can't be holding yourself back, staying in drawdown and then getting annoyed by it when you're not letting these things run in the first place. But I want to show you the methodology behind what we're looking at. So essentially, we're interested where the value is, where the volume is, and that's usually where the sharp moves are. So notice how price moved up very sharp here. What do? We broke that structure, we come back up, we left that footprint. This high didn't equal that high, this high didn't either, but it took that high out. This high took it all out, and then what did we get? We got the sell-off. So it would be the equivalent of the same thing. So someone will come to me and say, Mark, look, I took these trades, I got in around here, they're getting quite tight, right? And what happened to the 2 pip stop people as well? Where have they gone? The 2 pips, where it's like 50% in the morning. Like, what happened to that? How comes that's just disappeared? See, no one's doing that anymore, right? And I've said this from the beginning, unsustainable. And I don't care if you can do it on small amounts of money, the narrative has changed again. The narrative has changed, get as much funded capital as possible so you don't need to focus on returns. I've been saying that for years. So as you can see here, it would be the equivalent of 3-to-1, be there. You'd be in and out there, but again, this is just a simple structural low. So I'm not adding any more risk by keeping it. And I'm also not fixating on the returns. That could genuinely be a 3-to-1 or a 4-to-1. I'm actually fine with that. I still think that's a good return. I'm not fixating on the returns, so don't confuse that. What I'm saying is the trades that have the ability to play out, why not let them play out? Why are you capping them? And I've seen this with traders that trade more of these institutional ways, come in and then increase their performance so much just from the way that we manage trades, let alone the extra entries as well. However, just giving you a few examples here. So again, this was another trade. Oh, we absolutely smashed this run on euro dollar, way ahead in advance, right, into these areas. So let me just show you I'll show you the simple side of it, right? We'll just keep it even more black and white. I won't make anything even more complex. We'll just go high, this high doesn't equal that high, this high doesn't equal that high, breaks it, then we go. So now knowing what I've just shown you there, it would be the equivalent of, let's get the exact entry. So we're on the hourly here, which means that we have to 15. I know roughly because I remember this trade, right? Call it we'll go conservative 15 when you probably could have got 10. Where is 3? So 3 would be here. So it'd be like getting out there. So can you see why now that would make no sense when you got your structural low? So that would be the equivalent of me taking that trade, just setting it at 3 to 1, being taken out at 3 to 1, when I could just set it, even if I set it there at 4 to 1. But the probability of that following through to the low is so high, and you can go and test all of this. That's the beauty of it. You can go and test it and see it for yourself. So that would be the equivalent of that. And then notice how, when we move back up, where does price go? Price goes all the way back up to the origin of the move. This high doesn't take it out. This high here doesn't take it out. This high does. There's your trade. Another trade in here, another trade in here, another trade in here. Structural lows. 5%, 5 to 1. There you go. So it's not about the return, it's about the process of doing it. So if you're someone who's taking trades in here, for example, and you're going, this is where the amateurs would take the trades, so they don't know what they're doing, right? Because if you're taking trades in there, you've not understood volume or volume as much as you think you do. And what you've got to remember as well, surely if your goal, because what I've noticed anyway, and let me know in the comments by the way if you noticed the same thing, this elitist mindset that comes with the whole SMC rubbish, which is I know more than you. Well, if you know more, therefore you should make more, but you make less. So isn't that a flawed system? Because by your logic, I know less, but we make more, and our fund speaks for that. So it's really just about actually thinking about what you're saying. Like no one got into trading and said, you know what, I got into trading because, imagine you told someone, so why did you get into trading? Well, I got into trading because I wanted to be the most knowledgeable trader out there. I wanted to know why everything was happening. I wanted to know where the banks were. No, you didn't. Why are you fooling? You got involved in trading because you wanted to make money. And that's absolutely okay. Just don't brainwash yourself, because you have been brainwashed into thinking that you can search for your validation in this elitist mentality of understanding every single tick of the market when you got in trading because you want to make money. So focus on the primary goal, not some goal that just makes you feel good, right? Because that's not going to pay your bills. That's not going to build you the dream life that you want. So that would be the equivalent. Someone would show me trades like this and they would be like, right, well, I tried to get in here, I took losses. Like, why? There was no confirmation, right? You had your confirmation up here when it tapped into the top. You had your trade on the break there. You had your trade tapping into here. You had your trade on the break there. And then you had your target. It's so methodical. There is no guesswork. So this kind of propaganda of discretion is actually ridiculous. We're just assessing it trade by trade. So this is where someone would say it's discretion. And I'll show you. If I'm taking a trade up here, I'm going to manage that different. I'm going to manage that different to a trade down here, right? And notice how it's the same thought process all the way through. Look, there's the value. That high doesn't take out that high takes that high out. We're equal to it. There's a trade in here and there's a trade in there. And it would be the equivalent of me taking this. Let's say within here, I'm not even getting to the entries at this point. That would be, 3 would be there. It doesn't even make any sense. It would be capping that trade there when you just got the structural lows at 9.2. However, the one caveat I would say is that if I'm trading this far down, right, and I'm looking at the market positioning on the 4 hour there, when I'm trading this far down, I'm aware of these lows. So I'm going to be way more aggressive. I might even set a take profit. There's nothing wrong with 2 to 1s, 3 to 1s. But it's just, you see so many traders, they're deep in drawdown on their funded accounts, not making money, and they've fooled themselves into thinking, well, I just need to know more about the market. You don't. You need to know more about yourself. You need to know yourself intimately. Your psychological framework is going to be the difference of you making this money. And if you want to focus on 2 to 1s and 3 to 1s, all the power to you, but stick to it. Don't just change your narrative every 5 seconds. I think that's what I would love from the industry. If someone asked me, Mark, what would you wish about this industry? The people that are influencing people, you have to take this shit seriously, because people are following your every move. And you can't be someone who's hyping up returns and then 4 months later laughing at people that are focusing on returns because you were part of the issue. You created that problem and now you're trying to sweep it under the rug as if you weren't part of it. So be consistent in who you are, because otherwise I can't take people seriously. 1 minute doing this, 1 minute doing that, chopping and changing strategies, always switching things up. That's someone who's not got their shit figured out. And if you don't have your shit figured out, you don't have the right to then start to coach or teach other people how to do it, because you'll misguide them. They really want to work hard, they want to change their life, and you're quick to lure them into this facade when the reality is you've not got your things figured out yet. You're not consistent on high amounts of capital, and you're treating funded accounts like a game. It's ridiculous. It makes this industry an absolute mockery. So what I would love is for people to speak up a little bit more on the consistent messages that are actually going to help people. Don't get me wrong, it's not always the most attractive answer to tell someone to have a discipline routine. I get it, it's not always the most attractive answer to tell someone to focus on their mental framework, because there's no initial ROI, there's not that instant ROI, because they're obsessed with making money. But the thing is, the more you focus on making money in this game, the less that you make. So I really hope this episode has been eye-opening for you. If you want any questions whatsoever about Falcon mechanics, when it's coming out, 28th of November, I've warned you here. If you're in beforehand, you're gonna have access. If not, also for those of you that are interested in our in-house fund, right, if that's important to you, currently the prerequisite is 3 months of being a member at Falcon. That's moving to 6 months. So if that's something that is important to you, make sure that you're in on the 28th. Any day after, doesn't matter if it's 1 day after, the timer will be 6 months until you have access to the in-house fund. So make sure that you're involved. There's so many things coming. I just filmed 3 funded trader podcasts. 3 of our traders recently just become portfolio asset managers. You're gonna love their story. They've really worked so hard and I'm so happy for them. And we've got so many things coming. We have the goal for a £100 million fund. We are well on track, and it's not by chance, not by accident. This is deliberate, and you're gonna see it. 2024 is gonna be absolutely massive, and you guys need to make sure you're around the right people that have your best interest at heart.